Hello traders. Welcome back to Tradecoolmind, where we simplify the world of stock market trading for you. In today's video, we'll dive into the post-market analysis of Nifty the 23rd of January 23,200 call and put options. Stay with me till the end as I'll explain these charts in detail so you can understand how these levels work and how you can use them in your trading strategy. First, let's take a look at the Nifty 23,200 call chart. Here, we notice that the price opened strong but had a massive fall, closing at just 5.40, a significant drop of 88.60% for the day. Now, let me break it down for you. Intraday strong resistance, marked at 182.24, this was the key level the price couldn't surpass. Very strong resistance, around 147.22, which again acted as a ceiling. Intraday support level, 27.22, once the price broke this level, it triggered further selling pressure. Open interest levels, the key 23,200 CE level at 109.90 and 23,150 CE at 59.90 confirmed strong resistance throughout the day. So, the key takeaway here is that once the price broke support at 27.22, it was a clear sell signal. Now, let's move on to the Nifty 23,200 PUT chart, which shows an even more dramatic decline. It dropped a whopping 99.94%, closing at just 0.05. Let's analyze the levels here. Similar to the call, the intraday strong resistance was at 182.24, and the very strong resistance was at 147.22. The support level of 27.22 was crucial here as well. Once the price broke below this, it indicated strong bearish momentum. The 23,100 CE and pay open interest levels at 9.90 acted as a magnet for the price, as we can see it consolidating in that range toward the end of the day. So, what do these charts tell us? Support and resistance levels. These levels play a significant role in deciding whether to go long or short during intraday trading. Breakdown or breakout signals. A price breaking below support or above resistance is often a cue for strong momentum trades. Open interest levels. Always pay attention to these as they reflect market sentiment and key zones where price is likely to react. By understanding these levels, you can make more informed trading decisions and reduce the guesswork in your trades. Remember, trading is all about discipline and following your levels religiously. If you found this video helpful, don't forget to like, share, and subscribe for more such market insights. Also, let me know in the comments if you'd like me to cover any specific topics. See you in the next video. Happy trading.